what's going on, guys? Today I'm going to be doing a trade breakdown for you. This is a trade that I took um, this week. It was a really good trade, panned out really quickly, and I'm just going to be going over why I took the trade, the thought process, and in trade management. So how I manage my risks while the trade was running, because obviously we have like some huge candles that pull back down, how I didn't get stopped out, or how I minimize my risk while in profit. So I'm just gonna get rid of all this and pull out the replay tool, and I'm gonna go back to like Monday, which is when I called the analysis. I called this in our Discord on Monday that this could be a potential zone to look out for. So first things first, the easiest thing to spot for me was the imbalance that was happening in this area. There's a lot of imbalance, which usually means it's inefficient price, and the market usually falls back into these areas to fill this inefficient price. So the first thing I did was just do a quick markup. I got imbalance here, and imbalance is inefficient price, and imbalance here. And I'll just quickly label these. Imbalance, copy paste, imbalance. Right, so I've got my imbalance marked up. Now, in this point in time, I'm thinking, right, so the market's either going to come down to this area or come down to this area. We've got to find out which area is better valued for a buy. Now, to do that, we use supply and demand. So obviously, we had this massive push up here. So I'm thinking down near this imbalance is going to be the most optimal point for our entry. So at this point, I'll go down to the 30-minute and try and find a good candle to mark up the supply and demand. Righto. So we've got this candle. So basically, the area that I'm wanting to enter this trade in is around this area, around this imbalance, and around this supply and demand. So I called this on Monday, and I basically just had to wait 3 days for this to play out. I'll skip forward until the market starts moving down there. Market comes down, starts pushing into this area. At this point, we're in our zone. So now that we're in my zone, I'm jumping down to the 15-minute to find a good entry. So as long as it doesn't break this zone, this is a really good place to enter. So at this point, what I'm looking for is a weak candle, very weak candle, and a strong candle after. Right, so something like that. So we have a weak candle. I'm looking for more of a weak candle. So the reason I didn't enter on this candle is because it wasn't, in terms of my rules, I'm looking for a weak candle followed by a strong candle afterwards. And we have a weak candle here, but 2 weak candles straight after. It's not good enough to get the entry. And then all of this is super weak movement to the upside. So it's not looking good for an entry here. So I didn't enter here. I was looking for something else. So I waited a little bit longer, kept a keen eye on this market. And eventually it made a weak candle and a strong candle. So it came down. Okay, this is perfect for me. Zoom in. So right here is a doji candle, which means inconsistency. It doesn't know whether it wants to be up or down, so it stays in the middle. So we don't know, even though this is such a big candle right here, it's a very big push to the downside. Market at this particular point doesn't know whether it wants to go down further or up further. And we can confirm it wants to go up more because of this sort of engulfing, powerful candle right here. So I took a buy at the top of this candle, and I had my stop loss down below here with a take profit at the very top of that last swing high on the hourly. So this was the enter. Trying to keep my stop loss below this swing, basically, so that, if price breaks this zone, it's probably going to continue to the downside because it's a breaker structure. There's a couple of areas we need to look out for, particularly around this area. Obviously, we've had a couple taps and it's rejected this zone, so this is an area that we're going to look out for. But because the market moves so quickly within this trade, it pretty much broke straight through that zone, and it wasn't a big worry for us. So I was in the trade, straight into profit, which was nice, and it just flew up. At this point, I'm looking to move my stop loss to completely minimize risk and have a no risk trade. So the way I found my zone to get a safe place to put my trail stop is I used this area right here. So we have more imbalance here, which means it is likely that market could return to that point to fill that ineffective price. So I just marked it up like this, and I'll copy and paste this over here. So we've got imbalance here. I'll clear this up a little bit. So market was here, and I decided to move my stop loss to just below this area, basically. So I have my trail stop here. I'm going to make this a solid line, put some text. Stop loss. Alright, so at that point, my stop loss was there, and it was completely a risk-free trade, and all I had to do was wait for it to run to my take profit. If it didn't run to my take profit, we got stopped out. We take a little profit, no biggie. So straight after that, I moved my stop loss a couple of hours. The market started pulling back quite far, and it actually did come back down to this imbalance right here. This isn't a place where we could have bought again because we didn't have any supply and demand, which is predominantly what I was using for this trade. So once it came to this area and shot back up, I knew we were pretty much safe to just let this run. So I kept my stop loss there the whole time. I didn't see any point in moving it. Because it didn't come into this imbalance entirely, it was still a risk that it could come back down there. So keeping that stop loss there underneath that imbalance was a very smart risk management play. And then eventually, yeah, price ran up and hit my take profit, and it was like a $1,900 trade. So it wasn't big. It was only a $25,000 account or $20,000 account. So yeah, it was a 2% risk, and it was like a 3.7R or something like that. I think it was, yeah, it was like that. It's like 3.7 or something like that. So that was pretty much the trade. Quick breakdown for you. Obviously, we aimed for the highs of this level and just a little bit below them, just to be safer. So yeah, that's the trade. That was the breakdown. It only took a few hours to finish it. It was one of the better trades that I've done in the last couple of weeks. The rest have been pretty slow and painful. So yeah, that's the breakdown for the trade, guys. Hope you learned a little bit from that, and you can take that, what I've taught you, into your next trades. Take that risk management, that in-trade risk management is really good to have. Can save you a lot of the time. So thanks for watching, guys.